Okay, we had a mixed bag today. The Dow was up with help from the banks, again, back slamming into resistance levels. The S&P was flat and the NASDAQ was down. Again, we continue to have an AI sell-off. The Dow is masking what is going on. Again, the Dow's only 30 stocks. Yesterday it was helped by FedEx. Today it was helped by the banks. The S&P 500 and NASDAQ are not moving to new highs. But the headlines right now are, oh, the Dow's making new highs. It's not that the NASDAQ is selling off. We're beginning to see the start of the AI sell-off is camouflaging what's going on. The Dow was up 320, almost 27 points, up 0.68%. The S&P was flat. It was up 0.06%. The S&P, very interesting candlestick today. It was up 4 points. NASDAQ was down, and also the NASDAQ 100 was down. NASDAQ here, NASDAQ Composite down 0.26%. The Russell was flat. It was down 0.08%. The Russell had a rally, and it fizzled out, and it got a topping tail. Very interesting candlestick. And the VIX was up. The VIX bouncing off the 50-period moving average. VIX was up 1.39% to close at 17.52. The headlines right now are about the Dow making new highs. Yesterday, it made a new closing high. Today, it made a new intraday high and a closing high. Still slamming up into resistance. The S&P and NASDAQ are not making new highs. Pay attention right now. The VIX is trying to bounce off of, the S&P was slightly higher today, but in that hanging man candlestick, we have the VIX trying to bounce off of the 50-period moving average, the MACD right there at the center line. Again, if it bounces here, gets back above the 200-period moving average, the sell-off will resume for the S&P 500 with a lower high. Watching that hanging man candlestick. Now, the S&P filling the gap, flipped momentum back to bullish. Trending signals are bullish, others are bearish. Tells us we're either going sideways or up here with momentum. We got a hanging man candlestick just like we had back over here. So we'll be watching to see if it gets confirmed. Do we revert right back to bearish? Warned you last Friday. We come back to try to fill these gaps with our bottoming tail and hammer candlestick at the 50-period moving average. You have the opposite of that. Now you have a hanging man like you had back over at the top. The candlestick has to be confirmed. We need to close below today's low to validate that candlestick as a reversal bar. Again, the 10 and 20, the spread between them has narrowed. If we drop back down, they'll get a bearish cross like what we've seen with the Russell, and will confirm a lower high. Again, I believe that this high is going to hold. I think you're going to establish a lower high and then get a lower low, and I think that will mark the reversal here in the daily time frame. The other gap might get filled at 68.92, which is directly overhead. Even if you fill it, you still, you fill it and turn back down, you would still get a lower high. Getting our second awesome oscillator red bar for the week on the NASDAQ. Again, if we confirm last week's reversal bar, or confirmation bar, I should say, of the reversal bar, Gravestone Doji, get a reversal conditions here for a bigger sell-off in the weekly time frame. Red bars are showing that momentum is starting to wane. And for the NASDAQ weekly chart, again, you got the red awesome oscillator bars. These stochastics have rolled over with divergences in the most recent price action, the larger divergences, the divergences on the histograms for the MACD, meaning the MACD is going to roll over very, very soon. Get these divergences on these weekly charts with these histograms. Once the histogram goes negative, the MACD will roll over. It's the difference between the MACD line and the signal line. NASDAQ weekly chart here. Well, the S&P saw momentum turn back to bullish. NASDAQ did not. Again, it still has the gap overhead. Might get filled, but it tried to get above the 10-period moving average and turned down. Ended up with a down day below the 10-period. Again, notice the spread between the 10 and the 20. If we start selling up to go back and fill this gap and test this low and the 50-period moving average, then you can see those 10 and 20-period moving averages on the NASDAQ here and the S&P 500 daily charts join the Russell and get the bearish cross of the 10 and 20 period moving averages, and also on the 50 and the 200 in the 60-minute time frames. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, you like the indicators, please let me know that by supporting the channel today. The link below will take you to a secured site. Donate any amount you want. I thank you for your consideration for that. NVIDIA still has a bearish reversal of conditions with momentum. Again, it has a gap up here. Whether that gap is going to be filled or not, doesn't have to be, but it could. Have a gap higher on Monday. We're stalling at the 10-period moving average. If we go back up, attempt to fill this gap, the NASDAQ might attempt to fill its gap directly overhead. But if NVIDIA continues to have bearish momentum, NASDAQ likely will too. Then if we sell off, again, you can get a lower high, lower low. We have a gap down here and the low for NVIDIA, and then we have the gap up here. Very similar situation to the NASDAQ. Dow's making a new closing high yesterday. It made a new closing high yesterday. Today it made a new intraday high and another closing high. It's forming negative divergence into major resistance on the MACD and the RSI, but Dow's only 30 stocks. The S&P is not moving to new highs. The NASDAQ is not moving to new highs, and the Russell is not moving to new highs. Again, the Russell was down 0.32% today. The Russell got a very interesting candlestick. It rallied above the 20-period moving average, and then it reversed and gave back all of the gains. Coming back here and attempting to fill the gap here again. We filled it on an intraday basis here, and then did it over here again, and we turned off the momentum cloud, got a topping tail at the 20-period moving average, and 10's already crossed below it. Again, you're going to see this with the NASDAQ. Good chance you see it with the NASDAQ before the week ends or early next week, but it's about to happen. The crossover, the bearish cross of the 10 and the 20-period moving average, and then we'll be watching for the 10 to drop below the 50 here on the Russell. Again, Russell made a lower high as the S&P made a higher high, and they diverged at the end of October, often associated with a turning point. Sometimes they top and bottom together, but oftentimes there is a divergence. It's a Russell daily chart right here. Russell's pulled right back up to the 50 level on the RSI. Again, likely to turn down off of the 20 period and the 50 level here. Had a 50-50 sell signal. The Russell in the daily time frame got back above the 50 when we drop back below it here with a lower high. We turn here with this topping tail and it gets confirmed. Kind of a sloppy shooting star. We had a hanging man there on Monday. Now you get back-to-back reversal bars. You're getting a topping tail in the form of a shooting star, at least a sloppy shooting star. Again, if we drop back below the 50, you're going to see the 10 and 20 drop below the 50-period moving average, and a bearish realignment of the moving averages here on the Russell. This is a preview of what's coming for the S&P and the NASDAQ. Market's about to play catch up to Bitcoin. Bitcoin is likely about to get the death cross here in the next couple of days with the 50 crossing the 200-period moving average. Bitcoin's already sold off 21.65%. The market's going to play catch up. Bitcoin peaked on October 6th. The market peaked on October 29th. Usually what happens is Bitcoin peaks first and then the market follows just a little bit later. That's what I think we saw on October 29th. Now the market's going to play catch up. Bitcoin will probably find a short-term bottom if this L8 wave count sets up here with a leading diagonal. The other count is that we're already in crash wave 3, that we have a 1, 2, 1, 2, and we're now in the 3 of the third of the third. That would have to be validated again. L8 wave of speculation. Regardless, Bitcoin has sold off nearly 22%. The market's about to play catch up. Bitcoin ended the 4-year cycle right on the nose in October. And again, back when the 4-year cycle ended in 2021, Bitcoin topped November of 2021. NASDAQ right after that. Bitcoin is the asset with the most volatility. It's going to peak first, and it's going to lead the charge lower. If you want to see my latest Bitcoin video from yesterday, I'll link it at the end of this video. I talk about the Elliott wave counts. But we have a divergence right now between the S&P 500 and Bitcoin. Bitcoin peaked back on October 6th. The S&P peaked on October 29th. There is a divergence between the two. Sometimes you get these smaller divergences over a period of weeks or maybe a month or two. Sometimes there are larger divergences, but the divergences mark tops. Bitcoin in 2021 peaked. NASDAQ peaked shortly thereafter. S&P sold off, NASDAQ sold off, and then S&P and NASDAQ diverged. I don't think you get that right now because both NASDAQ and S&P slamming into major resistance, and S&P is behaving like NASDAQ Junior. But you could see that there is this divergence. Bitcoin's dropped nearly 22%. The S&P peaked 2 weeks ago today on October 29th. I think that is the top. We slammed into major resistance. Now I think we're setting up a lower high on the S&P and the NASDAQ. Nevertheless, I digress. Talking about these daily candles. Again, we got that topping tail, and we ended up giving back all the gains for the Russell. We've got that bearish 10 and 20-day crossover. Again, the Dow was up, S&P was flat. We were down here on NASDAQ just slightly, but again, we had a rally to the upper boundary of the cloud, and it ended up filling. We got above the 10-period moving average. We ended up closing back below it. And again, like the Russell, you're likely going to see the crossover of the 10 and 20 here very, very soon. If we start resuming the decline without filling this gap up here, you still might try to fill this gap right here. We filled the top one over here already on an intraday basis. If we continue the rally, this is the level that I'd be looking at. But again, if we don't fill the gap, and we don't have to fill the gap, you may not fill the gap. You do it at a later date, or you may do it years from now. We don't know. And again, there's no requirement that you fill the gap. Now, I told you we had these bottoming tails last Friday, and I told you we were going to go back and fill some of these gaps. NASDAQ can continue higher, then again, it can fill this gap right here. Right now, we're stalling at the 10-period moving average, trying to overthrow it, and down, closing back below at the red line you see right there. I told you on 2 weeks ago, October 29th, I told you I thought we had topped here the day of the Fed. The candlestick got confirmation and a follow-through. Then last Friday, I told you that we had a gap and trap on the intraday charts, and that formed this hammer, and I told you we are likely going to go higher and fill some of these gaps, maybe all of them. We got the announcement that the government shutdown was going to end. They had reached a deal in the Senate, and we saw the gap higher on Monday, and we've come back up and we filled these gaps. Right now, we're stalling at this gap resistance. I'll be watching this gap right here, or do we just get rejection at the cloud and the 10-period on the NASDAQ? You still have this potential head and shoulders pattern in play. It's still possible we fill this other gap. If we don't, then we need to come back and fill the gap from Monday here, and then come back and take out the 50-period and resume the sell-off. Again, I said 2 weeks ago, I've said every day since then, I believe that we've topped. We slammed into major resistance in the weekly time frame. I told you I thought the S&P and NASDAQ had topped. Now, the Dow's making new highs. We've begun to see the beginning of the AI sell-off. You're going to see more of it. The Dow making new highs. Dow 30, again, only 30 stocks, slamming into major resistance, distracting what's really happening. And that's, we're beginning to see the early stages of distribution with the AI stocks, and that's why NASDAQ is not making new highs. Neither is the S&P 500. So we'll see if we resume the advance, and if we do go higher, I'm watching this gap up here. But as I've said, I think that we've topped. I don't think that the NASDAQ is going to make new highs. I think we're setting up a lower high. Whether that's here or whether that's up here at this gap fill, we'll see. If we resume the sell-off, you got to come back down, take out the 20-period, drop back below the cloud, and then move to try to take out this 50-period moving average. But on the 29th, we did get the sell-off that I warned about, and I told you going into that week to be watching for a top with the Fed. That's what happened in 2007. The topping process, we sold off with the Fed, and we did here. But I told you Friday to expect a bounce at several gaps. I warned you about a bottoming tail here, and we've gotten the rally back up. And again, maybe it is done, maybe it's not done. I'll be watching this other gap. If we sell off, I'll be watching for the 10 to cross the 20. Now the S&P moved higher, but it got a very interesting candlestick today, and that is another hanging man. You may recall 2 weeks ago today, I told you we got a hanging man here at the peak with the Fed, and I told you again to be watching for confirmation and a follow through. It got it. We sold off again down to the 50. We got those bottoming tails. We got the hammer candlestick. Now we've gapped higher on Monday with the government shutdown, and we've rallied up to fill some of these gaps, which again is what I warned you down here with the bottoming tail, watching for the gaps to get filled. Now we're forming another hanging man candlestick, just as we did back over here. I'll be watching to see if we get confirmation tomorrow. If we close below this low, then you have a potential confirmation, or you will confirm it, I should say, but then we'll need a follow through like we got back over here. Are we now setting up a lower high? Again, I told you 2 weeks ago today to be watching for a top surrounding the Fed. Told you Tuesday, it might be it. Told you Wednesday, we went just slightly higher, got a gap and trap, and I told you I thought that was it. I still think that. Warned you down here. Again, had several gaps down. As we had several gaps up here, we came back to fill these gaps. We had several gaps down. Come back to fill some of these gaps. Now we're getting another hanging man. I'll be watching. Do we drop back below the 10 and 20 period moving average? And again, the spread between them has narrowed. So if we do drop down, you'll see a bearish cross and maybe see a bearish cross before the weekends, possibly if the candlestick, the hangman candlestick, is confirmed tomorrow. We still have this head and shoulders, and as I said, it might be a lopsided or really a slanted kind of a neckline. If this is the right shoulder, you might have this head and shoulders pattern, and this might be the right shoulder right here, and you've got this trend line that is sloping higher. That again, if we break down below the 50 and you take out the trend line, that could be the case. I told you again, possible. I still think we're headed down here, but even if you come down here, again, we might have this more horizontal trend line, as I've talked about at 65.50, which was our October 10th low. You also might note that the candlestick was a black candlestick, or hangman candlestick was a black candlestick, and oftentimes candlesticks that are black can mark turning points. Here it marked lower highs as we were sliding towards the 50 period moving average. Doesn't always play out that way. Candlestick, the black candlestick, means that we opened higher but then closed down below the open, but we didn't close below the previous day's close, and that gave you a black candlestick. Oftentimes they are associated with peaks. Signals on the S&P remain mixed. Some signals are back to bullish, others are not, and that's because we're going sideways. So we're going to confirm a lower high or not. Here the NASDAQ is still bearish, and here, and I'll be watching that gap overhead. Do we fill it or not on NASDAQ 100? S&P is still bearish here. Momentum turn today. Other signals on S&P turning bullish, because we're going sideways at the moment. Here, NASDAQ still bearish, but if we move to fill the gap, the signal could change. And other signals, if we attempt to fill the gap overhead, we don't have to fill it, but we could. And here we got the S&P turning back to bullish yesterday. Is it going to be short-lived? Watching the gaps directly overhead, do we continue to fill the gaps directly above? Or do we establish a lower high without filling those gaps? Again, I'm watching for a lower high to set up on the S&P, but did warn you last Friday about the bottoming tail, and that, again, we'd go up and fill some of these gaps. Bullish percentage moved into negative territory below 50 to start the week off. It's moving back up to 50 again. I'll be watching, see if it consistently remains in the negative region. And if it does, again, that's opening the door for a much bigger sell-off. It was very, very similar with the divergence and everything at to what we had at the February high. You might see it go briefly above 50 and then turn back down if we try to fill gaps at higher levels. And again, here it marked the counter trend, and then we resumed the decline. You got a good shot of setting up a lower high, and as I've said, I believe that the S&P and NASDAQ have peaked on October 29th. As I've said, I warned you it could bounce. I told you on Friday that I thought it would. To sell off, we got to drop back below the 200 here in the 5-minute time frame. The session we gapped higher, went down, went up, got a lower high, and then again went sideways. And this gave us a hanging man candlestick, this price action, selling off and then rebounding and then closing slightly positive on the S&P 500, pretty much flat, gave us that hanging man candlestick. 5-minute chart here, pushed back up. Remember, we had a slight breach of the trend line here for the rising wedge on the 15-minute chart, and again, we gapped higher and pushing back up, better defining the rising wedge, then broke down, getting the lower high, and really that gave us hanging man candlestick on the daily chart. Now this is very similar to what we had back over here, back at the top. On Tuesday ahead of the Fed, we had started to sell off, gapped higher, slightly higher, and then went down, broke the trend line, got a lower high, and then this followed. This looks very similar, again, gapping higher, breaking down, going sideways, much like what we had over here, but then this followed. So again, do we see that? And if we do, we need to take out the 50. We're resting on that. And then we need to take out the 200 and the cloud here, here in the 15-minute time frame. After that sideways move, we drop below the 50 period and below the cloud. You need to see the same thing happen here. Again, it looks very, very similar with the rising wedge and the divergence and everything else, the gap higher, very much like what we had 2 weeks ago with the Fed, the gap on the Fed. And again, you can see the same type of divergences here on the MACD. Still another gap overhead, if along with NASDAQ, so I'll be watching that. In order for this to play out now, you got to lose the 50 period here. It's acting as support here in the 15-minute time frame. Here you can see it on the 60-minute chart. Again, the rising wedge. We gapped higher. We got a black candlestick on the 60-minute time frame with that gap higher and turning back down. We broke the trend line of the rising wedge, turned down, went sideways after that, and that gave us the hanging man in the daily time frame. You still have this head and shoulders again. I talked about with the daily time frame. It's possible we have a neckline that is sloping higher. But I think you are going to be dropping down to this level, and then we'll see, do we get a shoulders at the horizontal level at 65.50. Now, I told you here we had a gap and trap back on Friday, and I told you that we were likely to see a rally to fill some of these gaps, move back and test the moving averages in the daily time frame. So that's what's happened. Now, we do have another gap directly overhead at 68.92 back over here from the initial sell-off. We don't have to fill that gap. We may do it at a later date. We may not do it at all. The requirement that we have to fill gaps. These people say, oh, you have to fill the gaps. There are a lot of gaps that go unfilled. What creates the gap is when futures, like here, futures, when we were gapping higher, futures is rallying overnight, and the S&P gaps higher based on S&P futures, gapping lower based on S&P futures declining. Gapped lower at the bottom because S&P futures were selling off, but we ended up recovering and closing positive by the end of Friday's session. That gave us that bottoming tail in the daily time frame. Again, going to be watching this, but we did come back. We filled Friday's gap. We came back here, filled the gap at 67.96, and now 68.52. There is another gap of 68.92. We got a hanging man candlestick. If we start to sell off, then we might be dropping back below the 50 and the 200 without filling this gap. And if we start to sell off, we need to take out the cloud. Again, we did get back above the cloud. But the spread between the 50 and the 200 is very narrow, just like the spread between the 10 period and the 20 period in the daily time frame. And if we start to sell off, you'll see those cross over. It may not be that we bottom out with the next leg down until we start seeing divergences or multiple points, reference points of divergences on the RSI. MACD may be about ready to roll over here. We'll be watching. Do we fill this other gap at 68.92, or is that all she wrote? And the hanging man candlestick gets confirmed tomorrow in the daily time frame. And here it is one more time. And if we confirm that candlestick, it could confirm a lower high. Now, again, in a sell-off, a rebound back up, got mixed signals. Some trending signals are still bearish. Other trending signals are bullish. So do we attempt to fill this other gap up here, 68.92, or do we turn and start trying to confirm the hanging man candlestick in the daily time frame? We got that topping tail from the October 29th high. It got confirmed. We need either this week or next week to get a follow-through, breaking below last week's low and taking out the 10-week moving average, setting up a lower high, and then in the daily time frame, we'll have the lower high, lower low, taking out the 50-day moving average, taking out the 10-week moving average would open the door for a bigger sell-off. Stock market to play catch-up to Bitcoin. Seeing that stochastic rollover in the weekly time frame with negative divergence. So if we get the follow-through to the confirmation bar in the weekly time frame, we'll be looking for a drop below 80 either before the weekend here or on into next week to start validating a lower high, lower low in the daily time frame. And the S&P is stalled at the upper boundary of the channel. And again, I'm connecting the 2020 low to the 2025 April low, excluding the shadow. Parallel boundary from the 2022 high, including the shadow, and you've slammed right into it, slightly overthrowing it and then not being able to close back above it and turning down. So going to be looking for a turn off of this area. If the hanging man candlestick is confirmed tomorrow, could be setting up the lower high, lower low, go take out last Friday's low. Filling the gaps is now done. We still have another one on the S&P directly overhead. This is the S&P weekly chart. S&P turned right off of that upper channel line, slightly overthrowing it with the Fed day, and then couldn't close, got the topping tail. So we'll be watching. If you look at the S&P with the log scaling and the S&P log scaling in the daily time frame, then we're in backtest mode. Some support levels here. If we have a successful backtest with a lower high and then break the 50, the green line, with a lower low, a lower high, lower low. You can see that a little bit closer here. If I zoom in again, possible breakdown and backtest of the trend line from the April low. Again, the log scaling. Divergence gave us a sell-off. Do we now confirm a lower high, dropping back below the 50-period moving average and taking out last Friday's low? If we do go higher, we still have that gap at the 68.92 area. Watching what becomes of this little tiny hanging man candlestick in the daily time frame. Now, again, we're getting the government reopening. You're going to get economic data out that is alarming in the labor market, the GDP, and again, the Treasury Secretary has already said government shutdown is going to impact the GDP. It was long enough, and I told you it's going to go on longer than everybody thinks. I was right. The longest government shutdown in history. It will be successful in putting the final nail in the coffin to usher in and bring about the recession. Again, I think by January, I think we're going to see a collapse, just as we did in 2007, as we did with the bursting of the tech bubble. I think the collapse right now is going to be bigger than what we had over here, which was a 21% sell-off, forming a massive head and shoulders pattern, both on the S&P and on Bitcoin, where Bitcoin's down nearly 22%, and the market tends to have a positive correlation with Bitcoin, usually diverge at turning points, is what we have right now. I think the market's going to play catch up to Bitcoin. I showed you the daily chart on the NASDAQ. Here's the 60-minute chart. Again, we've got the gap up here. I don't know that we fill these gaps, but you do have this gap directly overhead. Right now we're stalling at the cloud on the 60-minute chart. We've gapped higher on Monday, going sideways. So I'll be watching this area if we attempt to fill that gap or not. NASDAQ had a rally, but it fizzled out, ended down negative for the session. Look at the NASDAQ log scaling also. Again, you have the breakdown of the trend line from the April low, and you're in back test mode right now. Still may attempt to fill these gaps. If you do, then do we push above this trend line? This is, again, the log scaling here for the NASDAQ. So I'll be watching the gap here and the gap down here going forward in the daily time frame and on that 60-minute chart. This massive broadening formation with the overthrow move just slammed the NASDAQ into major resistance in the weekly time frame. The same broadening formation on NVIDIA at major resistance. It overthrew major resistance, but then turned off of it, the long-term channel. NASDAQ slightly overthrew the upper channel line with the October 29th high and then turned off of it. Again, the broadening formation into the channel here in the weekly time frame. Turned above the upper boundary, but could not close above it. We got a topping tail that was confirmed last week. Do we get a follow through this week or next week? So again, this broadening formation will play out with the sell-off resuming.